Hello, everyone, and welcome to FinTrail's FinCrime Spotlight, a mini digest which covers current and topical issues related to financial crime. I'm Eoin Collins, Senior Consultant here at FinTrail, and I have the pleasure of being joined by my colleague, James Nurse, Managing Director at FinTrail. James, thanks a million for joining as always.
Thanks, Eoin. Nice to be here.
Yeah, absolutely. And so this week we're going to speak about Wolfsberg Group's latest update to their correspondent banking due diligence questionnaire, which came out last week. There were a couple of, explicit questions that were added, just a small number, but I guess the big ticket item here really is that they've added a full new section dedicated to fraud. So in this episode, we're going to talk through some of these key changes and some of our observations alongside it. So to get us started, James, could you tell us about some of these key changes to the due diligence questionnaire, and if you think these changes are relevant and sufficient?
Sure. So, I guess we'll talk about the fraud piece momentarily, but as you mentioned, Owen, it's a completely new section right at the very bottom, which doesn't necessarily say that is the priority order of importance, but a new section right at the bottom, which we'll talk about a little bit more momentarily. But on top of that, there's also been some additional questions added, reasonably simple ones. And the first one is just, is there a whistleblowing policy? Do you have one? Something on virtual banking license. So does your bank have a virtual license or provide services only through online channels? So, remote versus non-remote, etc. And then the last one is just related to sanctions, and that is approval of a sanctions policy. So has that sanctions policy, there's obviously lots on sanctions already within the questionnaire, but has that sanctions policy specifically been approved by senior management? So I guess those are the key changes, one new section and 3 new questions, basically.
Sure. Great. And yeah, I think on that fraud bit, so again, like I think you're right, we should focus on this section because it's the biggest update by far. So, even though it is, it's quite a small section, it is still the biggest, I guess, change that we've seen in a while from these questionnaires as they've been published. What does this tell us about how fraud is being viewed through, I guess, across the industry, but particularly through this correspondent banking lens? And I know, FRAML is a favorite topic of yours, but are we kind of tiptoeing into this FRAML territory, or is this more of an indication of how rampant fraud has been over the last number of years, and just that we need to be paying more attention to it in general?
I won't touch FRAML too much, but obviously, half of this fraud exposure that a lot of these correspondents will see is ultimately still money laundering in terms of a predicate offence of fraud. So I think we don't need to delve too much into that. But I think, the general mood across, FIUs, regulators, banks, and e-money payment firms is that, and government, right, that the fraud is continues to be the number one threat to the world, not just the UK or Europe or the US, across all jurisdictions. So and rectifying that and solving that is becoming more of an area that people are more laser focused on than ever before, I guess. And certainly that's reflective on, from a correspondent perspective as well. If you're servicing correspondents who have significant fraud exposure, it's in your best interest to kind of resolve that as well. So clearly, that's reflective in, what's going on in this particular questionnaire from Wolfsberg perspective, and putting that on the agenda in this area. I know, and to be honest, I don't even know if this, from an implementation perspective, this is that much different. Having sat on the other side of the table of some of those, large banks before on those, annual questionnaires that they submit and annual kind of on-site visits, it's pretty normal for them to discuss fraud, and it's pretty normal if they see high fraud spikes for them to kind of scrutinize you and discuss those high fraud spikes. So it happens already, but nothing necessarily new. But I don't know, should we talk about the specifics in there as well?
Yeah, I think so. I mean, I think it's worth doing it, and put this up here. Let me see.
I've got them in front of me. Don't worry, Owen, if you want.
Perfect.
So,
go for it.
I guess there was, I think, 7 key new components to that fraud section, or section 14. I guess I'll probably summarize the top 4, because I think those are the most relevant ones, where the other bits associate to, does it do it to branches, etc., equivalent. Sure. But the main bit's the first 4 bits. So reasonably simple ones. Does the entity have policies in place in addressing fraud risk? The next one is, does the entity have a dedicated team responsible for preventing fraud? Whatever that definition means of dedicated, obviously. Sure. Does the entity have real-time monitoring to detect fraud, which is, quite an important one. And then finally, which is, quite an interesting one from a, technology perspective, is, do the entity's process include gathering additional information to support its fraud controls? For example, IP address, GPS location, or other device IP, which, is often generally deemed as an effective control to mitigate fraud through the whole life cycle of the customer.
Absolutely, and I think it's, like you said, I've also been on the other side of the table with this kind of thing, and I think it is really interesting to see that being explicitly called out now, because I think it was often, maybe this is going back a few years now, but curiosity maybe to see, like, what else do you have in place? What kind of technology do you use that's maybe outside of the kind of maybe standard that we've seen for a long time? So I think it is really, really interesting to see it being called out explicitly now, and it's, I guess, come across as an expectation now rather than just a bonus or nice to have. Great. And with this update in general, I think most would agree it's timely, it's welcome, and it's really a great tool, as it has always been, for firms to help them satisfy the FATF's recommendation 13 regarding additional due diligence for cross-border and high-risk correspondent banking. But with as the case is with all of these guidance documents, there's still, a risk of it being treated as a checkbox exercise. So, how can firms use this more effectively in terms of maybe deciding what sections to be a bit more of a checkbox confirmation and other areas to be a bit more in depth and a bit more of a deep dive?
Yeah, I mean, I guess there's a couple of aspects to that maybe just worth highlighting. I think, from recommendation 13, we've progressed quite a lot since then, and obviously, if you remember from before Christmas or before December, there was some iterations to the scope of the questionnaire as well, where other crypto firms, payment firms, e-money firms should consider falling into scope with some of these kind of things. So I guess the first point is considering if you do have downstream relationships, regardless of whether you're classified as a correspondent bank or not, do you need to consider adopting some kind of style approach on this, and making sure it's relevant to those customers as well? The questionnaire is pretty solid, but is it really working for crypto firms, and does you really get effective information to determine a crypto firm's efforts there? Maybe not. And then separately, I guess, on your just tick box point of view, it's there's a check and challenge piece. I could easily just say, yes, we have that, yes, we have that, yes, we have that, the same as any assurance or third party audit might do as well. But determining effectiveness proportionately within your resourcing and the risk posed to you is probably important as well. So making sure do you need to receive the AML policy? Do you need to receive the risk assessment? Do you need to review it? Do you need to make sure you see their transaction monitoring seat to make sure it's working effectively as well? So there's an element of proportionality there, and I think ownership of the actual framework. So are you speaking to doing an interview with the head of compliance or the MLRO who owns financial crime? I think it's not just tick 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 tick. It's is it effective? Check and challenge.
Sure. And I think that reflects as well what we've seen and what we've covered actually in previous spotlights, like the Central Bank of Ireland recently with their Dear CEO letter, talking about effectiveness as well. And that's really a theme we're starting to see come across. So I think it's something for firms to definitely pay attention to as well.
Yeah.
Great. Well, that's it today for our FinTrail FinCrime Spotlight. So James, thanks a million as always. A pleasure. Okay. And everyone watching, thanks a million for your time today, and we'll see you soon.